Okay, on to all you professionals out there. This could be a single professional, a married professional, it doesn't matter what stage of life you're at. You're a professional, you're making good money, you have lots of free cash flow. Now's the time to buckle down and really put yourself ahead to retire early, have more assets down the road, and just have a better, more enjoyable life down the road, and also, balance with a better, more enjoyable life today as well. So the first thing you should look at is set realistic goals. So, sit down, put a piece of paper there and set out your 1, 3, 5, and 10-year goals. Financially, personally, spiritually, everything in your life, set out those goals so that you can actually start spending around those goals and make sure that you're saving for the longer term goals as well. The second thing and most important thing in all of this is live within your means. You might be making $150,000, $250,000, $500,000 a year. That doesn't mean you can go out and spend it all. First off, taxes are going to take a lot of that, as you know. But you want to start building for the future. And if your income is above $150,000, you should be saving at least $1,000 a month into RSP and TFSA. That would be the bare minimum. If you're making more than that, obviously start saving a lot more. If you have corporations that your income goes into, you want to look at start using some of that corporate money to be saving and building for the future as well. So there's lots of tools around that. I won't go into that now, but the key is to live within your means and start saving for the future and take advantage of compound interest. The more you save now, the quicker it can compound and work for you. The third thing, and probably the biggest mistake I see professionals make, is they're using future cash flows to pay for current spending. So the greatest example of that is vehicles. So if someone will buy a vehicle for $100,000 and they'll lease it or finance it over, say, 3, 5, 7 years. So they're using future cash flow to fund their current spending. That's a terrible idea and will get you in the hole further and further down the road. So especially with vehicles, use cash to buy vehicles. That's the best way and the only way to buy a vehicle is to use cash. But don't use future income potential for current spending. It's just a rabbit hole you don't want to get down. And also, you don't know that income will be there in the future. It should be, hopefully it will be, but it's not guaranteed. So spend on what you're making today. Make sure you're saving and living within your means.